thinkers, gamers, and traders, welcome to JBeanTV, the prediction arena, where foresight meets fire. Let's dive in.
Welcome back, predictors. It's night 3 of challenge number 11. The week is flying by. We've covered a ton of ground already, from understanding supply and demand zones to mastering wick percentages with the enhanced indicator. Tonight, we're pulling those insights together as Doug helps us see the bigger picture, literally. He'll be showing us how to identify range in the moves, how to recognize when the market's expanding, contracting, or quietly setting up the next breakout. It's all about developing that trader's eye, learning to see what others miss. Then Doug's taking us behind the curtain to share what's next for JBean TV, including how AI training is going to shape the future of this platform and what's coming down the pipeline for our JBean custom indicators. We'll wrap the night with a quick check of the leaderboard to see who's climbing and who's finding their rhythm heading into tomorrow's finale showdown. So lock in, open those charts, and get ready for another round of insight, innovation, and friendly competition, because challenge number 11, night 3, starts right now. Hey, Doug.
Hey, BitCaz, how are you?
I am fantastic. I can't believe we're halfway through challenge number 11 already. It's moving right along. Well, I'm excited to see all of our predictors here tonight. Really excited to check in on the leaderboard later as well and see how everybody's doing with this market now.
It's tightening down and there's some interesting things going on. I got a lot to go over with us tonight. And BitCaz, I can start with you.
Okay, let's hear it.
Okay, so the concept is, if the market is moving, okay, or is the acceleration of contracts or the acceleration of people coming in and trading or purchasing contracts or putting contracts in, do we think that if that happens faster or slower is more important?
Well, if it's happening faster, well, I mean, they're putting contracts in. Sometimes they're to sell and sometimes they're to buy. I would think that if they're coming in faster, I would expect the market to move.
Okay, that's fair. Okay, who
slower.
next?
I would pick slower.
Slower is more important than fast.
Well, I'm just went over
Okay.
quick in my head there, but yeah, I'm thinking maybe slower.
Okay, that's fair enough. So we got one fast, one slow. Who's next?
I think faster, Doug.
Trader Lady thinks faster. Okay, I think that's so two
Because
fast, one slow. Go ahead, Trader Lady.
with it being faster, it has a lot of momentum.
Okay, so fast means momentum to you. Okay, great. Okay, and was that par excellence that was sharing?
Yes, faster as long as the contracts are accurate.
Well, that's an interesting concept. Can I ask you what accurate means to you?
Accurate means that the contract basically
As long as
executes.
the contract's going in the direction that you predicted.
Ah.
Up, baby. I'm not getting any younger.
Okay.
I love it.
Okay. All right. And I think DDOG had his hand up.
I'm going to say faster.
Faster. Okay. Overall, faster it sounds like is the census of the group. So let me quantify it a little bit different. What if I said number of contracts in a period of time? And what I mean by that, let's say we're dealing with a 10-minute period of time, and I have 100 contracts on average that come in a 10-minute period of time. Okay, so on average, 100 contracts in a 10-minute period of time. So I'm going to start with BitCaz again, and you guys raise your hands because I want to work through this, and because it's going to be very important for tonight's talk. So BitCaz,
Yes.
we got 10 minutes. The average number of contracts is 100.
Okay.
If in that same 10-minute period of time, I had 500 contracts come in, would that be important?
Yeah, that's momentum. Something's happening. Something's about to happen.
What if I
People-
only had 5 contracts come in?
I can go get another cup of coffee, I think, and not stress out about what's happening.
Okay, okay. Fair enough. I like that. Let's go to par excellence. Same question, 10 minutes. The average is 100. I have 500 come in. What would that mean?
There's definitely a shift in the market, either positive or negative.
True, right? Because 500 contracts doesn't necessarily mean up or down, right? It could be either. And that's a very good point. And to your point, if it's down, it's probably the wrong direction, wrong contracts. So, because you want it to go up. Okay, so Trader Lady, tell me. Same
Uh,
question.
I think it is showing a lot of interest
There
in
you go.
that area.
Right, whatever the interest is, right? If we go from 100 to 500 in the same period of time, that's showing interest. If we go down to 5 in the same period of time, it's not showing a lot of interest, right?
Right. It's like indecision there.
I'm going to ask you because you've been trading a long time, I'm going to ask you a more tricky question, okay?
Okay.
Uh, do you think that the number of contracts creates the size of the candle always? And I use the word always.
Yes, I would think so, because that's buyer interest or seller interest.
Okay.
That's what forms the candle.
Okay. So let's remember Trader Lady said yes to the number of contracts per kind of mandates the size of the candle, okay? Because that's an important concept that we'll be talking about tonight, okay? DDOG, same question. 10 minutes, average is 100. We got 500. Is that significant?
Absolutely. But I would ask the same question of, whether they were buyers or sellers, and then you'd also have to look at the volume.
Okay, fair enough. So lot of really good answers there, guys. All of those, go ahead.
Well, Wizard, if I could just jump in real quick. So I think even if you had 5 transactions, but if they were put in by institutions and they were giant transactions, that
Mhm.
is a big indicator of we've got something going on. So volume is a big part of it, I would think.
Let's just say, let's go with BitCaz for a second. Let's say we had 5 institutions put in a lot of money, and they're the only ones that put in any money. What do we think would that mean in terms of potential accelerations? Okay, so lots of times institutions like BitCaz is saying, they'll actually put in money in the market to see if they can get a bite, that get the market to join in, right? They kind of seed the market to see if they can get the market to pick up the ball and run with it. Because why? What do they want to do? They want to get the ball rolling. They want to see momentum catch on, and then they want to cash out. Okay. The opposite of that is true when they sell, right? They sell some to see if they could get other sellers to join in, drive the market down some, and then they set up the buy cycle all over again. Okay. So just because the institutions come in doesn't mean that they have enough on their own to really drive a large market, right? They can get a market moving, they can get people excited, but they're also looking for other participation. They're looking for other people to participate. And all of the indicators that I'm building is really around kind of that concept. Who's playing, who's doing what, who's participating, how many are participating is really what we're trying to analyze and what we're trying to do. All right. I'm going to dive into the lesson here tonight. I'm going to share my screen. And guys, just let me say, I'm getting much closer to being where I want to be with this stuff. Okay. The main goal for me, and I've started working building this portion of it, and I kind of gave clues to it last night, I think. One of the biggest problems with the advanced indicators and everything that I'm building and doing is I think most people, maybe beyond a lot of average people's skill set. So how do I help you guys with that? Well, and I had a fight with AI last night all the way to 12:30 p.m. last night. I started yesterday at about 3:30 a.m. and I got done last night at 12:30. Um, and the thing that I'm building that it will be really, really good for you guys is I'm aggregating all of the data a certain way for it to be compiled for you to give to your AI. Now I'm going to have restrictions and requirements to that where it can't be you just grabbing the data that I'm providing and giving to your AI and everybody coming up with the same prediction. I'm going to require some input at whatever level you are at so that you are part of that decision making. But a lot of the heavy lifting is going to be done by the indicators and by AI with your input. And I've been developing all of these indicators with that direction. So we're going to go through and we're going to look at the candles, and you're guys going to see something new on my screen. Has anybody noticed it yet? Probably not, because all indicators begin to look alike. The one I showed you guys last night was this one here at the bottom that began to show some of the inconsistencies. We're looking at shorts as it comes to the top, and this is that big down. I think that was on Friday, BitCaz, a week ago or so, or 2 weeks ago, whenever we had that big down. But we were seeing short setup potentially before that, but there's more. There's more to the picture. There's more to what's going on there, and I need to roll back that curtain more for AI to be able to really get a clear understanding of what's going on. What you're seeing here in the middle, the JBean Divergence Engine, is a tool that I built, and it's not based on time. Okay, it has nothing to do with time other than time frames it. Okay, so the question that I asked you guys, in a 10-minute period, if the average contracts were 100 and then all of a sudden they're 500, I think DDOG said super important, absolutely important, because it shows intent. One of the things that I developed in 4X was what I called acceleration. Okay. And what this indicator here is doing, it's really counting ticks, contracts. It's counting acceleration. And if you just look at the red and green bars, what the story is this is not volume. This is acceleration. Okay. So when we have a move, and I asked Trader Lady, was the number of contracts, important to the size of the candle? Okay. The answer to that is no. And here's why. Not that she was right in thinking the number of contracts is going to make the candle bigger. The question is the number of contracts, if there's no barrier, and we're going to look at what that looks like here in a second. If there's no opposite barrier, if there's no defense to the offense, right? If you're on a football team and you have nobody on the other side lined up against you, you're going to walk down the field to a touchdown, right? You have no opposition. Okay. If you have little opposition, you're still going to probably walk down the field and get a touchdown. But if there's a lot of opposition, right, then you could have a real battle between offense and defense. You could have lots of volume and not go anywhere. Okay, so when we're looking at these candles and when we're trying to understand our predictions for tomorrow, we're constantly trying to frame what is the opposition doing. If I think it's going to go up, do I have a lot of opposition to the up? Or do I have a lot of opposition to the down? What's going to happen next, and what's being set up? Okay, and that's what all of this is designed to do. And again, the algorithms that will feed to AI, the data that will feed to AI will help you guys with that a lot. But let me walk through this a little bit, okay? I'll start over on this side, and I'll collapse this for a minute, okay? This is all based on contracts coming in, acceleration compared to contracts in the same time period. This is daily, okay? The contracts don't have anything to do with the day other than the day is framing another number of contracts. You can see here on this day, we had a tremendous velocity surge. The green doesn't mean up and the red doesn't mean down in terms of the candle. All's the green and red mean, and I might even change those colors because we're so used to thinking about green meaning up and red meaning down, right? All it means is the number of contracts that came in. In this case, it was a down candle and it had a huge velocity surge of 203% over normal, okay? So we can see the intensity of the market. When I come over here, I can see this is slightly negative in terms of the market intent. It never goes negative in terms of number of contracts because each contract's a positive. It's negative in terms of its relationship to the average volume of contracts. So when I'm looking at this here and I have no interest in the market, that's what that's telling you. None, no interest. I get a bear divergence. This is a divergence indicator. Bear divergence normally means now down, but this is a bear divergence, 0%. Doesn't mean that the divergence is not there. There's a lot of candles with no divergence in it, right? There is divergence here. It's just not a heavy divergence, and there's no interest, okay? The market had no interest of going up So the only thing that it really had was a slight interest in going down. Not a big interest, a slight interest in going down. And the divergence told us that. The next candle came down. Okay. So if I'm predicting here for tomorrow, right? And I see this up and I'm going, oh, wow, look, we're going to maybe break up and here's my high and we're going to go here. No, it's not. This is not telling you that. It's telling you that it's divergence down. And what does divergence mean? Give me a 1 if everybody understands divergence. Give me a 2 if you don't, and just be honest, and then that way I can clearly answer this for everybody. And I'm going to bring up the chat so I can see it. So I'll slide it over. 1 if you understand it, 2 if you don't. Perfect. That's great. Okay. Oh, perfect, perfect, perfect. I can talk about divergence, one of my favorite conversations. Okay. When you think of something that's divergent, it's opposite of what you think it is. It's disguising itself, so to speak, as something different. And why is this divergent? It's a green candle. It's slightly closed up, but the contracts were down. There was more contracts going down. And again, it's a 0%, and there's 60% over here, and they're color coded to help you out, right? But it's still divergent, meaning that it's an up candle, but hiding in that up candle is more down pressure than up pressure, even though there's not a whole lot of interest in the market to go either direction. So the only piece of information you have, and even this indicator down here didn't give us a whole lot, okay? But this one did, because I'm looking at the market based on ticks, not time. I'm looking at the number of ticks in this candle, the number of ticks that go up and the number of ticks that go down, okay? And there wasn't a whole lot. Nobody was even interested in trading. Trading was low. Now, sometimes we'll see the volume, and it'll look contradictory. But this case, it was green, and I think that's misleading. I think this is much more accurate than even the better volume indicator. Okay, that's why I pulled this up to show you a little bit. So this is real. This isn't, better volume indicator is an estimation of stuff. This is real. This is what happened. Okay. Next candle. Yeah, it's a down candle. It had a slight volume. Again, green doesn't mean up. It just means an increase in activity. Okay. And it's slightly above our average. If you look at this golden line under here, that's really the average. It's not much above it. It's kind of neutral, but not a whole lot of interest either direction still. We have our volume at the bottom. Okay, so normally we would interpret that as, okay, this is going to hold potential pressure going up. But this is telling us people don't care. If they don't care, then there's not a whole lot of intent to this. So now we're beginning to isolate volume where it is, and we're going to begin to isolate intent around that volume. Okay? And once you begin to isolate those kind of things, now you can begin to really have mastery over potentially the intent of the market. Now, granted, there's always something that can happen. Fundamentals come out. Trump makes a statement. China does something. Russia does something. I mean, there's things going on around the world. Fundamentals happen. Non-farm payroll comes out different. It affects the S&P, whatever. Gold goes down, gold goes up. things are happening in the market. But what we're seeing is people that are looking at all of those things, and right now they're either still shell shocked from this over here, okay, and they're still not showing a whole lot of interest. We have another candle that goes down then, okay, we're down here, not a lot of interest. So even if I were predicting up, I wouldn't predict very high. I would probably set my low somewhere around here, even if I'm predicting up. Okay, I'm not going to go crazy with my prediction because I just don't have the interest. Okay, next day, interest goes negative. Market still comes down. There's no body putting up a defense yet to the market going down. It started here with a divergent. It came down here. Nobody really came in and said, hey, I don't like that, I'm going to drive it up. Candle came here. Nah, everybody goes, okay, yeah, going down, that's cool. I don't really care. Nobody really cares, okay? So the next one goes down, volume at the top, driving it down. Volume's not real heavy because nobody really cares, okay? So for the first time, we finally get a little bit, not a whole lot, right? This is at 4, if you look over here, the number, okay? This is a 48.29. At 50, you get one of these, velocity surge. So we're close. People are showing interest. Let me blow it up a little bit. This one will get off the screen. So it kind of looks a little bit different now. Now you can see the golden line. This dotted line, right at that dotted line, which we almost hit, you would have gotten one of these, velocity surge. Oh, people are interested. People are starting to show up, okay? And volume's in the bottom. Okay. So my next thing is, it's not super high, but I'm probably going to predict the up, right? Because I have volume in the bottom. I've got people showing up. There is a battle starting to happen, and the volume is telling me that a few people, not a ton, a few people are starting to get interested. Okay. But it didn't last very long. Okay. This is almost like what I was telling you to Deb's question, BitCaz's, right? Lots of times institutions will put in money to see if they can get takers. What they'll want to see is the next candle to have tick volume going up. They're doing exactly what I'm doing here, guys, for you. They're watching acceleration. I came up with this 20 years ago in the Forex, okay? Using future markets for the Forex. Time acceleration is very important. So some people came in, they said, hey, we're near bottom. Let's get involved to see what we can stir up. Yeah, nobody's interested. Okay. So yes, the velocity dropped completely off, right? We closed up. It doesn't mean we're going down yet. We still have the volume here from here, okay? Just doesn't mean that there's a lot of interest to drive it a long ways. So I wouldn't set 116,000 projection, because I don't have the interest. I don't have the players in the market to potentially drive that, okay? So my predictions should reflect that. It should be part of that, okay? Same here, no interest. A little bit more, it's not as negative in the interest level. Interest level, a little bit more. Volume at the top, still not a whole lot of interest, but the volume's at the top. Still, I'm not going to follow that up, right? Because I don't have a lot of interest to break through the volume. The volume's here. I broke through and we looked at this, right? It went up and then it came back down. There was just not a lot of interest when it was here. They became interested during this candle because our velocity went way up, and they showed that interest around these volume barriers, and they sold and drove it back down. Volume in the bottom, volume mix. I talk about that's really not something we like. We don't like to see high interest, right? And we're not talking about volume here. We're talking about actual velocity and interest is split. It's a split decision. Offense and defense are battling. Okay, my next candle doesn't go anywhere, right? And interest wanes, and look at what's happening now, right? Look at, we got bearish divergence in the current, right? We had no real interest to pick this up, break through these volume barriers to predict it up. Because when this closed, everybody goes, I'm gonna go to the beach, I'm gonna go surf a little bit, or I'm gonna go play golf. I don't care. Let the market figure it out. They have no interest. Okay. We can see it over here where, the volumes are slightly higher, and watch what happens over here. Okay. We have this up and we had this big down. Okay. And a lot of people said, it's what Trump said. And I think Trump absolutely played a role in it. Don't get me wrong. But I think things were already setting up, and it just kind of was that perfect storm, right? We have an up candle, we have high velocity, and we have the volumes showing in the bottom, volume showing here, but we closed above this volume. So this becomes a barrier. And so now we're saying, okay, we don't have a lot of resistance. Okay. So now we say, okay, now the market goes up some. Now we pick our target, just not a lot of resistance. So we can definitely say biased is up. Now this one's interesting, the next one, right? This is where this whole thing begins to set up for me, right here, right? We have less volume intensity. We're bear divergence at 60%, okay, on a small candle. That was the trader lady question, right? Can I have a small candle but have lots of ticks or a lot of interest? And the answer is yes, because I have a battle. And hidden in this green candle, we're starting to see the bears line up, okay? They don't take over yet, but they begin to line up. The market, the general public cannot see this. They don't even know this is going on. They're clueless, right? You guys aren't, okay? Next candle closes up. High velocity, doesn't go anywhere, but no divergence, okay? Next candle. Everybody leaves the party. It's like somebody turned off the lights, interest went away because people started saying, okay, we're pushing, but we're not going anywhere. These are tight candles. We're pushing, we're not going anywhere. Okay. So let's back off and see what happened. Well, slight up close, bear divergence, and the interest goes negative. No real interest, slightly right at 47, just not quite above the 50 line. Look again, tight close, low interest, 60% bear divergent on an up close. Next candle closes down. We've been bear divergent 3 times in this up move. Bears are accumulating, bears are positioning, and nobody is standing against them. They did here, but it didn't go anywhere. It's like they took their shot at it and failed. And they go, ooh, okay, the bears may be serious here. Okay, well, let's step aside and see. Oh, okay. The guys that have this kind of indicator sees this. Okay, bears are maybe serious. Retailers don't see it yet. Retailers don't have a clue that it's going on. Okay. Next one comes up. Oh yeah, bears are interested. Okay, less volume. Let's let it drop down. Okay. Nobody came in to push this back up. Not a whole lot of interest. It is bull divergent. Look at that. 20% though, not a whole lot, but not a lot of interest. So what is the next candle going to do? It's bull divergent. It goes up. Not a whole long ways because nobody's really interested, since over here all the tick volume, all the tick acceleration has fallen off, and this isn't a whole lot. Okay, next candle is that up push. These guys said, okay, well, let's see, let's give it a little push. They started accumulating in here because it's bull divergent. Not a whole lot though, not a lot of activity. It goes up a little bit. And that is bear divergent right here. 2 days before this. The end of this, 1 day, next day, this. And we're bear divergent and nobody comes in, not a lot of intensity to stand against this. And it's 1, 2, 3, 4. Bull divergence, bear divergence. This one's bull divergent, right? Volume's in the bottom. Again, not a whole lot of interest. And then, yep, the statement was made, or whatever finally put the gasoline on the fire, but the wood had already been put in the circle to be burned. Okay, and then boom, high velocity. You can walk through a chart when you have the right information and understand what is a high probability. Again, no guarantees, guys. All we're talking about is what is the high probability of what's going to happen next. Okay. And can we learn and understand that? And that's the whole argument for wisdom of crowds, right? That an educated group that is trained to see what the market is really trying to say, can they do a better job at predicting than people that aren't trained and cannot see and don't have the tools to see? And I think the answer is 100% yes. Okay. So this is a new indicator, okay, that I've been working on. It's done now. It will be part of a group of indicators that sometime next week I will get finished with the AI interface that will aggregate all of this data, and AI then will be instructed to know what to do with this data. And again, to use that, I've got to figure out how I'm going to do this portion of it, because I need everybody to also give their personal input to that data, so that I have individuals that are affecting the market and affecting the understanding of the market. And as you get more and more educated, you will affect it better. So as you read this, one of those inputs might be, before it allows you to even get the data, that you lock in whether you think it's an up or down. Those kind of things that I need from you guys. But you guys are going to have tools that nobody, I believe, unless you're part of an institution that has quants programming for them, and you're getting paid $500,000 to $1 million a year to trade, you're not going to have this kind of tool. So, all right, let me pause for a second and take a breath. This will be an area that I'll cut out. But let's see if we have any questions, if you want to raise your hand.
Does that mean that you're going to provide us with hundreds of thousands of dollars, if not millions of dollars, to go ahead and trade using these indicators now?
No, they usually pay that to use these indicators. It's the other way around.
We have to come up with the money.
Yeah, you had it backwards, BitCaz.
Dang
But
it.
good job, good job. But no, the guys that trade these kind of indicators are the guys that are making 500,000, million plus a year trading because they can understand. And yes, they're probably making smaller moves, trading larger amounts of money, right? But once they have this, right, they're putting this is an edge for them, putting odds in their favor, you know. And if they're wrong, you know, they thought it was going to go down maybe here, right? They saw the volume here, even though there's not high interest and it was divergent bull up. I don't know how they would think it's going to go down, but say they did, they're not going to be very wrong, right? So, yeah. Any other questions, guys?
Is that another example, Doug, of divergence?
Which one, buddy?
Having to pay your own money to trade.
Yes, absolutely. 100% divergent. And it works for me really, really well, but maybe not so well for you guys. No, they get when you're trading for a fund, and I've done a little bit of that, right? So when you're trading for a fund, you know, you get paid a lot of money to be right? But that house or that fund, they hire quants that develop stuff like this so that you have the tools you need to be right. Boy, but if you're not right, you're not there very long. So,
Right.
okay.
Who's ready to trade?
I know I'm getting so excited about
Oh my
trading.
gosh, once we get this, I don't know.
Yeah, I'm getting excited about getting insights back up, getting the trading going because
Yes.
these are the tools that I wanted to build and I couldn't build, and now we have. So exciting
Incredible.
stuff. So,
All
all
right.
right, let's get to the leaderboard. All right, let's look at the leaderboard, guys, and see how we do. I need to resort. We got our sort function now. On the close, where the 0 doesn't count, right? On the close, look at BitCaz was number one on the close.
Ooh.
Look at that.
Well,
Okay.
I never get the close right.
Well,
Awesome.
04, 01. I don't understand.
1 would be
Oh, this is on the high. Here's the close. 06.
Oh, okay.
Okay. 1.2. Wow, that's the closest one to you.
Wow.
Which was Beanie of Truth. Okay. Doing great. But BitCaz, wow, nailed that thing. You must have had a serious talk with your program, your AI.
My
Okay,
AI, yes.
let's check out the low. Who was the best on the low? BitCaz. Again, number one on the low.
Wow.
Wow. Okay, so the low 0.5, Beanie of Truth 0.07, 0.05, Okay, I don't. Oh, look at W. Now, how did you beat? I don't know about this. WOC is 009 on the low. So, okay.
What was the low? What was 106? Yeah, that one beat me. Something's
Yeah.
wrong on the sort.
Yeah, something's wrong with the sort, but that's okay.
It's okay.
You're the two humans, and this one here is at mode was even at 07. Wow.
Wow.
Yeah. This is a pretty stellar group right there, though. Those are pretty stellar numbers. Then we have Trader Lady, fun with it. Okay, let's look at the high. Beanie of Truth
Beanie, nicely done.
at 01. BitCaz at 04. What the heck, BitCaz? Old Sailor at 06.
Nice.
Wisdom of Crowds at 0.9. Okay, we have a 08 down here for Bitcoin Magnet. So looking good. So let's sort on who was number one overall. And that is BitCaz.
Woohoo!
And we have Beanie of Truth, WOC, and Mode, and then Old Sailor. Crypto Kid coming in third of humans. Great job, buddy. Par Excellence, Trader Lady, DDOG, and the rest doing good, guys. Everybody's doing good. So looking good, guys. And don't you guys like the leaderboard?
It looks like Beanie and Truth and I are duking it out this week.
Again.
Yeah, let's see.
It's me and you.
It's me and you, sister. I love it.
All right. Well, come on, guys. Guys have got to get it together here. The male population is flailing here. So
Girls rule.
I heard that in like second grade. Second grade.
Myself. Yes. Well, what a night on JBean TV. Doug took us deeper into market structure, helping us see the range within the moves, not just react to them, but that clarity, seeing where the real activity sits between expansion and contraction, is what separates random chart watching from strategic prediction. Then came the real treat, a peek inside the next evolution of JBean custom indicators, from the velocity surge zones to bull and bear divergences to the open interest pressure index. Doug showed us how every layer connects, how AI training is already shaping the next generation of these tools. You could literally see the intelligence forming in the candles and in the data and in how we're learning to read it together. We wrapped by checking the leaderboard, and once again, this group continues to impress. Some of you are locking in precision calls night after night, proving that skill, not luck, drives consistent accuracy. Tomorrow is the finale of challenge number 11, and it's going to be a big one. We'll bring everything together, the data, the indicators, and the intuition. So rest up, review your charts, and get ready to close the week strong, because JBean TV isn't just predicting the market, we're building the future of how people see it. Good night, everyone, and we'll see you in the finale.
That's a wrap from JBean TV and the Prediction Arena. Keep predicting, keep climbing, and I'll see you next time.